Hello everyone and welcome to my YouTube channel. For those of you that don't know me, my name is Mark. I'm a CPA as well as a financial investing coach. Have you ever wondered on how to get started or feeling out this whole investing thing and wanting to build wealth? Well, in today's video, I'm going to go through some of the key questions I get as a financial investing coach on tips on how you can get started building wealth in the stock market today. And if you stick around, I'm going to give you 3 foundational positions that you can start investing in today. Let's get started. Thank you again for joining me today. As always, everything shared in this video is for informational purposes only. But if you could do me a huge favor and smash that like button down below, that would be instrumental in the growth of this YouTube channel going forward. The idea of this channel is for me to promote financial literacy and discuss everything, whether it be finances, stock investing, going over positions that I'm looking at, to help you, a new investor, an advanced investor, anyone looking to get an edge in the stock market. So let's get started with some of these key questions and the most common questions I get as a financial investing coach. Question number 1. Doesn't even have to do with opening a brokerage account. Before you go out and open that brokerage account, if you haven't done so already, the first thing that I want you to do is to invest in yourself. Invest in your self-education. Understand the stock market. There's nothing worse than going out investing your hard-earned money in something you have no idea what it is, or what it means, or what valuations are, or what a specific stock is. Understand an overarching understanding of what the stock market is. What are the indexes? What are these key indexes? The Dow Jones, the S&P 500, the Russell 2000. Get an understanding of those. Get an understanding of how do stocks prices fluctuate? What makes a stock tick? What are these earning reports that come out? What are dividends? Get an understanding of these foundational items. And there are so many opportunities for you to go out there and get this education, whether it's via books or articles. There's courses out there that you can find online or in social media. But whatever you do, invest in your knowledge before jumping in. And that leads us to step number 2, or the second most common question that I get from new investors. What type of account should I open? So instead of just rushing and opening an account that you have no idea what type of account you are opening, get an understanding of the different types that are out there. You have taxable accounts and you have different retirement accounts. There's 401ks, there's traditional IRAs, Roth IRAs, there's a self-employed IRA. All of these things are available to you out there. A 401k now, that's more of an employer-sponsored account, so a lot of employees out there or employers have those, and if yours does, I will discuss all of these accounts in greater detail in a separate video. But just let me give you a high level of what each of these accounts are so that you can make an inclined decision here moving forward so that you can get started investing in the near future. So the 401k, like I mentioned, we're going to have a list of mutual funds that you can invest in. Most of the time, it's a traditional 401k that you can invest in, which means it is a pre-tax investment that you are making. Your investments will grow and then you will pay tax later in life. There's a traditional IRA, which works in a similar fashion, except the fact that you aren't restricted to the mutual funds listed from your employer. Instead, you get to invest like a regular taxable account where you can invest in individual stocks, ETFs, even options if you chose. But first, you want to be educated in those because I want to point out that those are very risky investments. But with traditional IRA, these again are pre-tax dollars. Your money will grow and you will be taxed later. A Roth IRA, which I happen to believe is one of the best wealth building accounts available to you out there. A Roth IRA grows with post-tax dollars. You will contribute after-tax dollars. Everything will grow tax-free and you will never see the tax man again. What is in your account is yours for the taking. A taxable account is going to be just using after-tax dollars, and you're going to be taxed on any gains that you make. Anytime you sell a stock, if you made money, you're going to pay tax on it. Anytime you lose money, you can write that off against your taxes. But there's no real tax advantages to a taxable account. So truly understand which account fits your needs, your strategy. And of course, it can be a blend. You can have a 401k. In fact, I have a taxable account, I have a 401k, I have a Roth IRA. So you can have a mixture of any of these, but just understand which one is best and have an understanding what these accounts mean. This leads me to the third most common question I get from new investors. Mark, how much money should I invest? Well, of course, this is a personal question. It's going to be different for each and every person. But what you want to first do is get your finances in order. If you have any high interest debt, I want you to attack that first. That includes credit card debt, student loans. And then what you want to do is figure out your retirement. How much money do you want in retirement? What age do you want to retire? And kind of work backwards from there. And you can kind of figure out how much money you need to invest on a monthly basis. Let me give you an example. Say you're a 20-year-old right now and you want to retire when you're 60. You want to retire when you're 60 with $1 million. Well, at age 20, you would need to start investing $215 per month, earning a 9.5% return each and every year. Do that for 40 years, and voila, you are a millionaire. That seems more than doable. Over the past 5 or so years, the S&P 500 has returned 15% per year. Now, of course, I don't expect that moving forward. Traditionally, it's closer to that 8 to 10% return year over year. But you will have your down years and you will have the higher years. But always stay invested for the long term and you will meet those goals. This leads us to the fourth most common question I get from new investors. And that has to do with what type of investment should I make, Mark? Should I invest in individual stocks or ETFs? Or should I just jump into options? Well, let me pause there. Options is never going to be the answer that I'm going to give you if you're just getting started investing. Options can be very risky if done improperly, and they take a lot of education and practice and repetition. So truly get a good understanding. But the first thing I always want new investors to do is to build a strong foundation. This is so key, especially in times when the market has a downturn. You want to know that you have a strong foundation. The majority of your money is sitting there in strong ETFs, index funds, or high quality dividend stocks. So I'm going to leave you with 3 foundational positions that I invest in personally. The first one is VOO. That's the Vanguard S&P 500 ETF. This ETF is pretty self-explanatory. It tracks the S&P 500 index. It's made up of 500 different stocks, which provides diversification to your portfolio right from the start. The second ETF I'm going to leave you with today is SCHD. That is the Schwab US Dividend ETF. And if you follow me on Instagram or if you follow me on Twitter, you know that I love dividend stocks. And I have a lot of foundational dividend stocks in my portfolio. But what the SCHD does, the Schwab US Dividend ETF, it provides diversification of a large bundle of dividend paying stocks. This ETF will pay you a dividend as well on a quarterly basis, but it's made up of high quality dividend paying stocks. And the last ETF I'm going to leave you with to build a strong foundation for your portfolio is VTI. That is the Vanguard Total Market Index ETF. How's that for diversification? Total market. That means you are getting a position in every US public company out there. All of those companies would have to go belly up for you to lose all of your money. How's that for diversification? So those are 3 foundational positions that you can get started with today. You can put your orders in and start building little by little. You may not be able to get to that $215 per month right now. Maybe it's just $50. The key is just to get started, and you can ramp up those investments over time. Once you pay off more debt, income increase at your job, or maybe you start a side hustle to bring in some extra income, and you can start applying that towards your investments each and every month, but make it a habit. Building wealth over the long term, it takes a mindset change, but I believe that each and every person is capable of doing it. So if you enjoyed the video and you haven't done so yet, again, please smash that like button down below it, as that will be instrumental in growing this channel going forward. I will be touching on everything finance, We'll be touching on stocks I'm looking at, from growth stocks to dividend stocks, ETFs, index funds, and we'll be touching on a whole charade of different financial topics going forward. And consider subscribing. And with that, hopefully that helps you start your investing journey. Take care. See you in the next video.